All right. So, what is the breakdown? So, I'm going to break it into 5 questions for you. Okay. Are you following? For me, that's how I like to teach my courses. I break them into question 1, question 2, question 3, question 4, question 5. So you know the outline of the entire course. Now, your question 1 mostly, okay, will be made up of the tax audit framework. Okay. So mostly question 1 will be made up of tax audit framework. I'll come and tell you what the tax audit framework is. Okay. And what goes into the tax audit framework. Okay. Now, question 2, most of the time, will be made up of audit planning and audit planning issues. Okay. Question 3 and question 4 will mostly be made up of field work and investigation. You see what I was saying? Please mute. Please mute. Oh, yeah, some more. So we have field work and investigations. Okay. Field work and investigation. So field work and investigation span across two questions. Are you getting it? Then we have the ethical and legal framework. We can add it to the audit framework, but let's just say that the question 4 will leave it to assessment of taxpayers. So assessment of taxpayers is where we have the indirect methods and all those things. I get it, which includes tax investigation. So because the assessment is what brings the investigations, right? Which is separate from the fieldwork and investigation. Then we have the review and reporting. Okay, review and reporting questions. Do you get the whole idea? So your 5 questions are going to span like this. Are you getting it? So if you go in for a tax audit exam, this is how you should expect the structure to be. It doesn't mean question 1 exactly will be, they can mix it up, but mostly question 1, question 2 are around these areas. Question 3, 4, 5 are around the areas that I've suggested. Do you want to put it down? Can I now look at the actual breakdown? Can I now look at the actual breakdown?
Yes, sir.
Please. Let's
Yes, sir, you
proceed.
can go. Yeah.
All right. So let's now go deeper. Now, when we talk about the tax audit framework, let's start with the question 1. The framework of tax audit is simply understanding the nature of audit itself, right? So you have to look at the nature of audit, the word audit. What does audit imply? What are the different types of audits that there are? Are you getting it? So you have to understand the different types of audits. Are you getting it? You have to understand the concepts that are used in audits. Okay, like accountability, stewardship. Are you getting it? Then you must know what the objectives of audits. That's simply mostly statutory audits. Then come and look at what we call specialized audits, for which tax audit happens to be what? A part. Okay. So once you understand specialized audits, which includes tax audit, you have to look at tax audit in itself, what it means. Are you getting it? The mandate of the law. Okay, the mandate of the law on conducting tax audits and the objectives of tax audit, right? Then achievement of tax audit objectives. Okay. So when we say you are achieving tax audit objectives, what actually goes into achievement of tax audit objectives? Okay. We will come and look at it in 2 phases. So you set objectives for every audit. Maybe you want to make 240 billion Ghana cedis. Can you actually achieve it? You want to do 500 audits in maybe this quarter. Can you do it? Do you get the idea? So there are some particular measures we use for the achievement. We have to look at the various stakeholders in a tax audit. Okay. And we have to look at what roles and responsibilities. Okay. So usually I like to add this one to the legal and ethical framework, right? So this is one of the biggest areas. Okay, so roles and responsibilities, which comes with the taxpayer's charter. Okay, then we have the legal and ethical framework. Okay, so the legal and ethical framework is here. Then we have what we call the things like money laundry, auditor liability. But like, really, are these things in the syllabus? Yes, they are. If you don't know, I'm telling you. Money laundry is there. Auditor liability is there. Fraud and error. And NOCLA, non-compliance with laws and regulations for tax auditors. Okay. So this is like the framework, right? Then the limitations and advantages of tax audit, da da da. So these areas are a lot of theory, and we'll be discussing them very fast. And I'll also teach you how to apply them. That's where we'll be focusing today. We'll be focusing more on question one and question two. All right. So this is the areas that come in question one, and we are going to discuss more of these issues, which mostly come for 20 marks. Are we okay?
Yes, sir.
Can we move?
Yes, please.
So we don't waste so much time. Now, question two is mostly about planning issues, right? So when it comes to planning, we usually call it pre-audit research. Okay. So pre-audit research, this is the research you do before you actually meet the taxpayer. So sometimes you see the word pre-contact procedures. Why pre-contact? Because it happens before we contact the taxpayer. Does it make sense? So here, this is where it gets interesting, right? You start with the boss himself, right? So most people don't know that when it
Yes,
comes to
please.
tax audit, the planning in itself is a set of procedures, right? Statutory audit takes a different turn. Tax audit is also a different turn, but I see a lot of students still use the normal statutory audit approach to still answer tax audit. Please don't do that. All right. If you do that, you are going to fail. So most people fail tax audit. Tax audit is one of the highest failed papers, but recently, Omo Gumu Kakra. But they are going back to the original way the paper is supposed to be. So I'm preparing you just for that. So let's say under planning, the first thing I'll put it in red. Why? Or let's say Lady Pinky. Let's put it in pink. That is the selection of the taxpayer for an audit. Okay. So we said selection of taxpayer for what? For the audit. Does it make sense? So the whole thing is that when it comes to selection of a taxpayer for an audit, there are rules, and this is the mandate of the law that I was talking about, right? And Section 36 of the Revenue Administration Act begins with the mandate. So there wasn't any section in any law that was mandating tax audit, but this Revenue Administration Act says, now, because of voluntary compliance, right, there is a framework. So that it wouldn't be like GRA is intruding on the affairs of taxpayers, right? They should have a portion of the law that says, hey, listen, we have come from GRA and we have to audit you, and this is our license. So this is what licenses the authority to conduct an audit. And here is what can help them select taxpayers and even audit and re-audit them. So sometimes they can tell you that under what circumstances can the Commissioner General call for the re-performance of an audit? You've seen that question before? Yes, they are just asking you about Section 36.
What is the total?
36.3.
Do you understand?
That is what the company will be profit for you.
Please, somebody's background is noisy. Please.
So that is what
You have another class. Kindly mute and listen to your class. We beg. You are not the only one on the call. We beg you. All right. So, Section 36 of the Revenue Administration Act, right? Now, after they select you, you see, you are not it's not the auditor who selects the taxpayer. The auditor can only select a taxpayer if under a compliance management plan, maybe I was doing a research on you, I was dealing with your returns, and something came up, or somebody gave intelligence information that I gave to the authority. Then the auditor has been the one who gave notification to select the taxpayer, but then it is selected from above. Then all you have to do is now go and receive the case assignment from your hey Charlie. Hey, Asemo.
Prof, I don't know. Can you meet all of us? Can you meet all of us?
So once the taxpayer is selected for the audit, you are going to receive the case assignment. Okay, so you are going to receive case assignment from the head of audit, right? From the head of audit. So once they select the person, they will now assign the case to you. And then once they assign the case to you, you are now going to collect background materials, right, about that particular taxpayer. So collect background materials. Are you getting it? About the taxpayer. And as part of collecting your background materials, you are going to know about the knowledge, about the way his industry is, go to the website, check the internet, do even look at the returns, right, to see whether there's been some sort of inconsistency, his profit margin. So you do what we call a preliminary analytical review. We'll be doing that today. We'll learn how to compute ratios. We do all those things during this stage, right, to collect the background materials. Now, once we collect background materials about the taxpayer, the next thing is to now do what? Risk assessment, so that we know where to focus in the audit, right? So we do a risk assessment. So this is where we remember ICPA, right? Yesterday I mentioned it. So we identify the risks, we categorize them, we profile them, we analyze them, and we assess them, which includes responses. And the responses is what goes into the audit program. Okay, we'll come there. So once you're able to assess the taxpayer for risk now, the next thing we are going to do is to now what? Determine the scope and depth of the audit. Determine the scope and depth of the audit, right? That is what we call the audit strategy. Okay, so if you want to know, sometimes the examiner may ask you what's the difference between audit strategy and audit plan. So the audit strategy, it determines the scope and the depth. But when it is documented into a document, it becomes a plan. Are you getting it? So the raw steps on what to do, the entire business, its architecture, how to go about it, the complexity, are you getting the nature, the material, all those things are part of the strategy, what stuff to allocate. But when it is documented, I get into the audit planning memorandum, it becomes the audit plan. Does it make sense? So the plan contains the strategy. Always remember it like that. Does it make sense? So from here, you are going to now what? Document your conclusions. Okay, so from here, we document what? Conclusions. And the documentation of your conclusions from whatever scope and depth you have is what goes into what we call the audit plan. All right, or the audit planning memorandum. Okay, then finally, you discuss with your supervisor and the team. Discuss with supervisor. So supervisor and team. Okay, and this is where we will now decide that okay, now we have more information about the taxpayer, and therefore we can what? We can send a notification. So this one ends the planning stage. Do you get it? This one will now end the planning stage. Then we now send a notification to the taxpayer. Then that begins the field work stage. But since today, this is all we are going to focus on, I am not going to talk about question 3, question 4, or question 5. I'm going to leave it in the dark. Are we okay? That is it. So that I don't bombard you. So if you have any question, you can put up your hand. If not, we can begin the journey. Who has any question for me? Kindly put up your hand and you will be called. Yeah, Harry. You can unmute. Harry, you can unmute.
Good evening.
Good evening, Harry. Harry is my long lost friend. Harry, I'm listening. No, you can unmute.
I brought him back. I reconnected the two of you.
That's nice. That's nice. Thank you. So, Harry, it seems he's Wayo. I don't know. Harry, you can speak.
Please, can you hear me?
Yes, I can.
Yeah, with regards to the risk assessment, you have
Yeah.
the ICPAA.
Yeah, I see.
Can I get the abbreviation?
Oh, I will teach you.
Yeah,
Don't
can I
worry.
get the abbreviation again?
Identification of
Okay,
risk,
okay,
categorization of risk, profiling of risk,
okay,
analysis of risk, and
okay.
assessment of risk, which comes with the responses as well.
All right, all right,
All right.
okay,
Are we okay? Any other
all
question?
right.
Any other question? Yeah, Harry, your hand is still up.
Sorry. Let me just clear it.
Please, I need questions. So the questions are my food. Yeah, Musa.
Okay, let me ask my question. um, so under what circumstances would the Commissioner General select a taxpayer for an audit?
Yeah,
And my second question is, and is it during the planning stage that you do the risk identification, the categorization of the risks, the profiling
yes,
of
they are
the
all under planning.
tax?
Yes, they are all under planning. They are all under the planning stage.
Oh, okay. Okay, that's fine.
Thelma, please, your hand is up.
Yes, when you were discussing it, when you got to your third point about collecting background material of the taxpayer, you said this includes analytical procedures. How deep would you go? Because I think the fieldwork too, you'd also employ some analytical procedures as
Yeah,
well.
so analytical procedures work at all the three stages of an audit, right? Now,
Okay.
at the planning stage or the pre-audit research stage, we do it just to gain knowledge about the taxpayer. So we call it a preliminary analytical review. I remember the first time I joined an audit firm, because I was part of the tax team, I happened to do this preliminary review. All we did was review the financial statement, look at where there are inconsistencies, right? And channel it with the taxpayer's business, whether there are some inconsistencies or areas that are subject to risk. That's all we do. But at the
Okay.
field work stage, we
Mm-hmm.
compare, are you getting it to
Mm-hmm.
budgets, we compare it to management assumptions and corroborate, agree
Okay.
it. So that one is purely for evidence generation. But the one we do
Okay.
at the planning stage is not mostly for evidence generation, but just to familiarize ourselves with the taxpayer's business. Do you understand?
Okay. Yeah,
Good.
okay. You said right now you would review financial statements. How would you get access to that if you've not yet contacted the taxpayer?
Oh, the person has filed returns before.
Okay,
So,
okay, that's true.
we use the previous returns. And then this one even builds deeper. If I want to go beyond the exam, then I'll have to take you into correctness check and completeness check. Okay. So anytime we take
Mm-hmm.
returns, okay, we look
Mm-hmm.
whether the things that are on the return itself are correct. And two, whether the things that the person filed are consistent with what is in the returns. So one is a completeness check, whether the return itself you have done it well, and one is correctness check, whether the things you have put in, even though they are complete, there's something wrong with them. And this is what breeds a tax audit. So tax audit is actually the independent examination of a taxpayer's, let me not use taxpayer, someone's tax return vis-a-vis his financial or the underlying records that go with that return to confirm they comply with the tax law and other frameworks, not only tax. Your accounting framework is also part. That's why you have to submit audited financial statement together with your tax return. Does it
Okay,
make
thank
sense now?
you. Yeah, it
You're
does. Thank
welcome.
you.
Good. I did for you. Yes, Michael, your hand is up.
So, sir,
Yes, boss.
please, yesterday when you were teaching, You said all this process can be categorized into 4 sessions,
Yes.
which is the planning stage, the
Planning,
audit, the
field
documentation,
work,
and
and investigation. 3
yes,
is working paper documentation, and finally
yes,
review and reporting.
yes. So all these ones, is it under the planning stage?
Yes. You see, the
Okay,
4 stages are stages on their own. Oh. But then,
okay,
listen, you see some of the things like the legal framework and maybe even the audit documentation, right? It is
yes,
done everywhere. I mean, from day one, we start documenting. But we
okay,
put it as a separate stage on its own because there is essential info you need. Do you understand? After
okay,
you do the field work. But documentation starts right from the start. And you always go with the framework. If you are going for the audit, you carry some laws along and other things along, right? So now we
okay,
are all tax auditors on the call. That's how I assume you. You have to embody it so that you enjoy the process. Okay. You are not
okay. Thank you.
students, you are tax auditors. Thank you. Harry,
Okay,
your hand
thank
is
you.
still up. Oh.
Prof.
Do you have a
Prof,
question for me? Yeah, Joyce.
so does the planning stage goes for all the types of audits?
Yes, it goes for all the types of audit. But then there are 2 instances of a tax audit, and I'll come and explain very soon, right? An audit can be a
Okay.
planned audit, meaning that we inform you, that's we send you a notice before we actually come and visit you. Or it can be an emergency audit, meaning say, yeah, mbawa money, and what triggers an emergency audit? Maybe we have heard some kululu is going on, or something is going on that we are not aware. I get our third party information, be able to and change. Then we can bounce in and announce. Even an emergency audit is still planned because we have a strategy we have to still use to audit the taxpayer. Does it make sense? There's no audit which is not planned. Do you get it?
Thank you.
You're
Yes, please.
welcome. Good. Please keep the questions coming. I did for you. All right. If we have no questions, let's move. So, first of all, what is an audit? Anytime you hear an audit, we are basically talking about statutory word audit. Are we okay? So, it is simply an independent examination or simply an examination by an independent person of a set of accounting books, records, or documents. I get it, from which we prepare a set of financial statements. That is what an audit is. You see here, I didn't add anything like a true and fair view because all audits are not statutory audits. But mostly when we say an audit, the first thing that comes into your head is what? Statutory what? Audit. Is that okay? Is that okay? Does it make sense?
Yes, sir.
So somebody who is independent of the business, meaning he has no relationship with the business, comes to check whether whatever the business is doing, are you getting it? Have met some sort of what criteria. You get it? And the reason why the person will do that is either to express an opinion to as to whether proper books have been kept. Now, listen, it's not every audit that you go and do to show a true and fair view. No, some audits are just to go and check whether you have kept proper books. Some are just to check whether you have the proper books, whether you are meeting a proper accounting framework. It depends. If a sole proprietor comes and tells you, "Oh, I want you to audit my accounts to see if the girl who is my sales girl is chopping money from my account," was it about true and fair view? It wasn't about true and fair view. Do you get it? But it still has the characteristics of an audit. So when we go to assurance engagement, I'll explain it better. And that's our last meeting. We'll talk about those things. Now, so the person does this to express an opinion whether you have either kept proper books, I get it, your financial statement agree with those books, I get it, whether you have met applicable legislations, you have complied with them, whether you have applied the necessary accounting standards, whether local and or international, and whether the financial statements show what? A true and fair view. Now, this is the statutory audit, or this is the nature of an audit. Now, we have to look at what we call what? A specialized audit. So we saw a statutory audit, which I was telling you that this is where what an independent examiner will examine to give an opinion on whether proper books have been kept or the financial statement give a true and fair view of the state of the enterprise and whatnot. But then there's what we call the specialized what audit. Now, with a specialized audit, what happens is that if we require some sort of special attention on a special issue, okay, so let's say that maybe a particular government entity will be there and requires that some people are not keeping proper internal controls and therefore we have to go and check them. It's a specialized audit. right? So a specialized audit is normally involved whenever we need some sort of special attention on a special issue. Tax is a special issue. So tax audit happens to be what? A specialized audit. And the objectives are not part of the objective of a statutory audit. Okay, so whenever you require some sort of special attention on a special issue that are not part of the objectives of a statutory audit, it means you are doing what? A specialized what? Audit. I get it. And during a specialized audit, the auditor will cover in his report the particular objective that he wants to achieve as set out in your terms of reference. Are you getting it? So a tax audit happens to be an example of what? A specialized what? Audit. I said it before. So I told you that in our law, right, where Section 36 of the Revenue Administration Act, right, has given the power of the Revenue Authority to conduct an audit. And yesterday I was telling you that if we say Revenue Authority is conducting an audit, it doesn't mean that all audits that GRA does are actually conducted by GRA. GRA, depending on the nature and complexity of the audit, they can outsource it to other firms to undertake it, right? That's what I've been telling you. I think yesterday I mentioned this, those who were here. I believe yesterday I mentioned this.
Yeah, you did.
Yes. So it means that the procedures may differ a little, but it still has to go with the GRA technical guidelines. After that, we take your working papers and then we judge it against GRA technical guidelines. So now, prior to the introduction of the self-assessment scheme, okay, there was no provision in the tax laws for an audit because GRA was the one who gave you the tax to pay. Do you get it? So in the past, what happened was that no matter who you were, even though some people were allowed to self-assess, they were handpicked by the commissioner. Okay, so those who could self-assess, it was the commissioner who picked those who could self-assess. But no matter who you were, GRA was the one who was going to give you the tax you are going to pay. But now, because of this section, that has changed. There was no provision in the tax laws for an audit, right? So now Section 36 of the Revenue Administration Act was introduced to give the tax authorities the power to conduct an audit. Does that make sense?
Yes,
And you
please.
see, this thing that gives them the power to conduct an audit is the same thing that we use when we are selecting what? Taxpayers for what? An audit. Okay? And these are the triggers. If you are preparing a transfer pricing report, these are the same triggers we call transfer pricing risk triggers. Okay, so in case this time, this is for those doing international tax. In case you go and they ask you for transfer pricing risk, it means look for all issues that can make them what? Select that taxpayer for what? An audit. Does it make sense?
Yes, sure.
Good. I like the yes, sure. All right. Please, I hope that makes sense. I hope that makes sense.
Yes, boss.
Good. So now let's look at the power of the authority to conduct an audit. Now, the section 36 that we said that mandates or give the power of the Revenue Authority to conduct an audit says that the Commissioner General, the boss himself, right, may in the exercise of his power to assess a taxpayer's information after he issues a notice to obtain information from you. And mostly this issue of information comes in two ways. It either comes when maybe he wants he's going to issue you an adjusted assessment, right? He requires some information from you 14 days. Do you remember? So after he takes that information from you, he can say that, okay, based on this information, I think this taxpayer requires an audit. Do you get it? Before we do all the planning, we now go and take, that means you have been selected for an audit. We now go and receive the case assignment and do the things I was talking about. Do you get the idea? So the commissioner, once he does this, he may audit your affairs. Are you getting it? So how does he do that? He's going to select you for the audit or even to reperform an audit that was previously done. And these are the factors. One, he may select you for an audit having regard to your history, to whether you have complied or not complied with the tax laws. Are you getting it? Somebody who has complied and somebody who has not complied. Who do you think we are going to audit? Who do you think we should go and audit?
The one who is not complying.
The one who is not complying. And sometimes you being too clean too can be fishy. Somebody who is too clean Why did there be a refund? Charlie, at you, we yanko check is no cry.
There's something under the sleeve.
That's why you crife do do. Yanko check it. Maybe I know ABB was sumase. Do you understand? So, yes, so that is it. So the commissioner may use these to check. Are you getting it? Two, the amount of tax payable by that person. So look, somebody who owes GRA 50 billion Ghana cedis and somebody who owes 10,000 cedis, who do you think the authority should go and audit?
50 billion.
50 billion.
The one with the 50 billion.
Of course, because that is a huge thing to trigger. Why are you not paying? We should know whether that 50 billion crown they can come. Do you get it? So there was this client of mine who sold the property for 25 million Ghana cedi. And he actually went to pay the tax that was on it. But immediately as he paid the tax, GRA came to audit him. Why? Because this one is like into Makata there. So how did you get that huge 5 million to come and pay tax? That means baby shetokrobu baby. So we have to uncover it. You understand? So these are some of the triggers. I mean, you came to pay tax of 5 million Ghana cedi and you didn't struggle, you didn't rent to swore. That means oh be baby. Or true or false? So
It's
immediately
true.
after that huge transaction, GRA was after him. Okay. Also, the class of business or other activity conducted by the person. A simple somebody doing his export business and somebody who is doing complex manufacturing and has a lot of subsidiaries across Ghana. Who do you think we should go and audit? The one with complex business, right? So the class of business itself that you are doing can trigger the authority to come and audit you. Do you get it? For instance, somebody who is into a telecom business and somebody who is into manufacturing, the nature and scale of your business alone can trigger the authority to audit you. Do you get it? So also a criteria developed under a compliance management plan. And mostly this one comes from the GRA, their system itself, the TRIP system, right? And the system can randomly select you for an audit. So audits can also be...
We are no more using trips. It's
so which one are you
GitMiss.
now?
GitMiss. And very soon ITAP.
Okay, that's nice. I get it, but it still uses the audit management plan, right?
Yes, please.
Good. You get the whole idea. So we are saying that now under the GRA system, you are still going to be selected randomly. That's part of it. Doesn't mean that all the time it's random, but they use some certain factors. Maybe 3 years after you are audited, right? All the people who have been audited in the last 3 years, self-assessment taxpayers, they can select them. Do you get it? And any other matter that the commissioner may consider what necessary. And this is where this analytical review we're talking about comes in. It means that we can review your returns and see where you were risky, and then we use it to audit you. Do you get the whole idea? So when we are selecting you for an audit, are you getting it? We can look at management policy of GRA itself. Are you getting it? Risk assessment based on your audit selection criteria. Maybe we look at your turnover. We look at how complex you are, how you have complied, or maybe we receive some information from somebody, or even third-party information, right? So we have so many things we consider, right? Like public interest in a particular industry. Let's say that you have this entity who invested so much money into NAM1. Men's Gold, before Men's Gold collapsed. This is something that GRA will find interest in auditing them, right? Or a business where there are frequent changes in their laws. I get in. All these things are the relevant factors that the commissioner may consider. But apart from this, there are other audit triggers which you will see in most questions, right? Like one, high operating expense ratio. So if you have a business that has high expenses to turnover ratio, it means that this guy needs to be audited. If you have discrepancies between your financial and tax treatment of cost, the way you treated the cost in accounting is different from how you treated them tax-wise, we can audit you. When you have significant fluctuations in profit, we can audit you. When you have a lot of receivables, a lot of refunds, like VAT and withholding refunds, if you do a lot of business restructuring, transfer pricing arrangements, you have a lot of related parties. Okay, you have significant unutilized capital allowances or financial costs, right? You do frequent acquisition and mergers, Are you getting it? You have a lot of claims under double taxation agreement. All these things. You see, anytime you have to receive from GRA, he has to audit you. As a Bema, we she oba we bisan iska. She doesn't know you well. Officer this kind of Bema. But the man can meet a woman the first day, just put money in her hand. The woman will look at you 2 times, get to know you first. So GRA is like that. They must audit you before they give you a refund. Do you get it? So section 66, 65, 66 of the Revenue Administration Act and 67, you have to go and read it because of refund audits. We'll come and talk about it. But you get the whole idea. As a Kasane does, in the question, Anna. Can we take a question?
Let's continue, sir.
Yes, please. Let's take a question.
All right.
Hello, Prof.
Yes, boss.
Yeah, please, concerning the potential triggers, can we add this one to it? Continuous losses. Maybe you have been
Of
making
course, it's
losses
part of the
continuously.
triggers. Yes, of course. It's part of the triggers.
Okay.
Yes.
All right.
I'm coming. I'm looking for program rules of tax audit and investigation program. Playing YGRA. Look at this. February 2020, question 1. Yeah. So I believe you can see my screen. Now look at it. It says what? The Ghana Revenue Authority is empowered under the tax laws of the country to audit or review returns and information submitted by taxpayers. Required. Explain briefly 4 objectives why GRA may conduct the audit of a taxpayer's returns and records. And mention and explain 5 circumstances that may necessitate GRA to audit the records of a taxpayer. Can you see that? So 1, they are asking for the objectives of an audit. Why should we audit you? And 2, how do we select you for an audit? Everything I tell you is just exactly how they are going to ask you in the exam. Hello? Did it make sense? Did it make sense? And I hope Bibi Adadin.
Yeah.
Has everything fallen into place?
Yep.
So we can
Yes,
proceed.
Yes, boss.
All right. So you see that these are the same ways they are expecting you. And this question has come in different forms. It has come in different forms. All right. So yesterday I told you that I will teach you how to draft an introductory letter. So if you go to the exam, they can tell you to what? Draft introductory letter, which is the notification, the audit notification. Okay, so you see how it has come, right? So the following letter from GRA, the Managing Director, Wahid Engineering, DSA, Audit Operations. This letter serves to introduce you to what? Ira Madruwa and Haruna Wahab Rashid of the area of Isunyane, who have been assigned to what? Conduct audit verification into the operations of your business. Are you getting it? Vis-a-vis your declaration to the authority. We request in accordance with the Income Tax Act and the Value Added Tax Act and accompanying regulations, you provide them with all relevant records and other documents to enable them complete the assignment on time. Yours faithfully signed. Are you getting it? So you can just do something basic like that. However, an actual audit notification goes beyond this, but this is just basic, which can fetch you some 5 to 10 marks. I hope that makes sense. I hope
Yes,
that
sir.
makes sense. Good. So let's
Yes,
go
please.
back to where we were. I hope it's making sense. All right. So a tax audit, we said, are similar to special audits. They are additional to statutory audits. That's why even if you go to GRA, you must still send your audited accounts, right? And they are carried out by tax officials or even assigned auditors by GRA. Are you getting it? And the approach and scope of work will be slightly different from that of what the statutory audit. A tax audit exercise is meant to enable the tax authorities to further satisfy itself that the auditor's financial statement and related tax computations submitted by the taxpayer agree with the underlying records and even comply with the tax law. So remember earlier on, I told you that tax audit involves what? Independently examining someone's return together with underlying financial records to confirm whether they comply with the tax law, right? And whether the records are right. Is that not so? So why a tax audit? Tax audit has so many what do we call it? Objectives. But the main objective is to ensure voluntary compliance. What did I say? It has so many objectives, but the main objective is to what? ensure what?
Ensure voluntary
Compliance.
compliance.
That's the main thing that is difficult to achieve. Do you get it? It's difficult to achieve because
And
how
to protect revenue.
yes, how do you even know somebody will comply after you have done the audit? There's somebody that immediately you audit him, instead of he complying, you say, so when the authority came, they didn't check this, then I'll hide there. There are people like that. So compliance is one of the objectives that is difficult to achieve. Are you getting it? So before we even continue, I want to introduce you to some things, right? One is what? The KPIs. Are you getting it? Or the measures that we need, or measures to achieve a tax audit objective. So before you achieve what? The audit objectives, there are 4 measures. What did I say?
4 measures.
Yes. And what are these 4 measures? So these 4 measures are: 1, what we call the quantity measure. We have what we call the CD or revenue measure. Okay. We have what we call the quality measure. And we have what we call the compliance measure, which is the ultimate we want to achieve. Now, we are saying that to measure whether a tax audit objective has been met, we start with quantity. It doesn't mean this in order. It can be arranged anyhow. Now, we are saying quantity relates to what? The number of audits. So if we are saying that, okay, we are using a quantity measure, that means that how many audits were done during a specific period. So maybe GRA said that they want to do what? Maybe 7,000 VAT audits, right? So if they want to do 7,000 VAT audits, and then they have been able to do 7,500, have they achieved the quantity measure or the quantity objective?
Yes, sir.
Yes, they have met. So that's how you measure quantity, right? The number of audits that have been done based on quantity. But quantity may not necessarily be quality, right? And then the CD or revenue measure for achieving a tax audit objective has to do with what? The amount of Ghana CD or dollars, right? So the amount of revenue actually generated. So if GRA forecasts that they want to raise 43 billion Ghana CD, I get in it, and they ended up raising 40 billion, has this objective been achieved? Has this objective been achieved? You wanted to raise 43 billion, you only raised
No,
40.
please.
No,
It hasn't been
No,
achieved.
please.
Now, quality is quite difficult to measure, but quality has to do with what? The number of review comments that came from your audit head, right? Or your audit seniors. So if you get positive reviews, they didn't query you too much, and also less objections from the taxpayer. Do you get it? So let's say that after this audit, the taxpayer doesn't object. I get it. It tells you that the audit was quality because you did the right thing, right? So less objections, I get it, or neglections from your head of audit. Then compliance is where the person voluntarily comply, and this is one of the most difficult objectives, I get it, to obtain, or most difficult measure to actually measure. How do you measure whether people have actually complied? You can check how many people have actually filed out of the total that you audited, how many people actually paid, but it's difficult for somebody to automatically comply. Okay, and then tax audit, if people will comply, depends on what we have: the deterrent effect. I get it. The deterrent effect of a tax audit, and then the preventive effect of a tax audit. So this is how tax audit checks accounting issues. Let me explain. If somebody who recently heard that they've come to audit his friend and they've imprisoned him and he paid 50 million Ghana cedi, if he wants to do fraud, do you think he will do it? Do you think he will do it? He wouldn't do it. It will prevent him. Then one who is already doing it, he's going to stop, because somebody has been audited and the person has paid a lot and is also imprisoned. Do you get it? So the deterrent effect stops people who are already doing that thing. And preventive effect means that it stops people who are about to do it. Do you understand? I hope it made sense.
Yeah.
So these are like some sort of KPIs that are actually set for achieving a tax audit objective. Makes sense. But they are not the objectives itself. However, if you are stuck on point, you don't know what to say, you can reframe them to be objectives. Do you understand? Exam is all, how do we call it? Improvising. That's all. So tax audit itself exists to what? Raise revenue for government, even get statistical data, educate taxpayers, right? Check if all applicable tax legislations have been complied with. I get to provide an avenue to educate taxpayers on various provisions of the tax laws, discourage tax evasion. I get in it. And encourage voluntary compliance. So we said there are so many objectives, and they can ask you. We just saw a question that was asking something like that, right? It can even help identify what cases involving tax fraud and recommend them for investigation and encourage voluntary compliance, which I told you what is a keyword objective. Now, we have to look at the types of tax audit, okay? I told you that tax audit, the ones that has to do with from the startup to the planning, all of them are done at the office, okay? Then field work is where we go to the field. Now, all the background checks, receiving the case assignment, all that, they are done at the office of the auditor, right? So when it is done at the office of the auditors, okay, the auditors or the authorities, okay, we call it what? A desk what? Audit. I said we call it what? A desk what? Audit. So a desk audit is carried out at the office of the auditors or at the office of GRE. Okay, so a desk audit can come in some forms like a risk return verification. This is where you examine people's risk, their tax returns, and assess the risk of the taxpayer at the revenue office. So here is where we do the correctness check and the completeness check I was talking about, right? We call it a risk return what? Evaluation. Is that clear? Is that clear to everyone? Is that clear to everyone?
Yes, sir.
Yes, boss.
Two,
Yes, please.
we can also do what we call registration check for new enterprises. So let's say that a new enterprise, let's say an AI automation firm has just been created in Ghana. We have to check their registration requirements. I get and whether they comply with all the new enterprises they've registered with the authority. What are the registration steps? Like when this betting company started, how these things were. GRA was doing this registration check for these new enterprises. It's part of the desk audit that they do. Do you understand? Does it make sense?
Yes.
Good.
Yeah.
Now,
Yes, sir.
if this thing is done at the office of the authority, now when they visit the taxpayer, that is where we call what? The field what? Audit. Okay. Now the field audit is carried at the premises of what? The taxpayer. So we also have forms of field audit. So field audit can take the form of comprehensive audit, issue-based audit, and even refund audit. We talked about refund audit earlier. You remember, I told you that anytime somebody is sort of applying for some sort of refund or drawback, we have to we have to audit the person because we can't trust that refund, whether the source of the refund is true. Does that make sense? So a field audit can be a comprehensive audit, meaning that it covers all tax types. Are you getting it? Which is also known as what? A full audit. Or it can be an issue-based audit, which we call a specific audit or a technical audit. So a technical audit means that we are literally what? Auditing a particular tax type. Maybe you are only conducting a customs audit or we are only conducting a VAT audit. Are you getting it? So that's a technical what? Audit. Makes sense. Then a refund audit is carried out when you have what? Applied for a refund under section 65 and 66 of the Revenue Administration Act. Are we okay? I hope we are learning something.
Yes, boss.
Good. Now, I want to talk about, after already talked about this, I want to talk about the approaches to conducting a tax audit, right? So there are two approaches. I mentioned it before. Who can remember? I told you there are two approaches to a tax audit. Who can remember? I told you we can have what? A planned approach. Do you remember? Do you remember?
Yes,
I think
boss.
Joyce asked the question and she said, "Oh, does all audit require planning?" And I said, we can have a planned approach where we inform the taxpayer, right?
Yeah.
So we inform the taxpayer before we come, or we can have what? An emergency approach, right? So emergency approach means that based on some particular intelligent information, right? no information or no prior notice is sent, are you getting it, to the tax?
That's when we have the hint that the taxpayer is leaving the country.
Yes, this is
Just
an example of that, an emergent approach, right? So based on this, in the Revenue Administration Act, sometimes you can even do a preempt, right? You can even do
Reprint here.
a preemption, right? Where we even determine the tax liability ahead of time for you to pay, knowing that this guy he's a bad boy. He's going to go out of the country. Do you understand? Now, one interesting thing is that there are other types of audit apart from a tax audit that you must know, okay? And they can ask you external audit, compliance audit, performance audit, environmental audit, social audit, IT audit, management audit, internal audit, and what they are. This one, I'll leave it to you as a homework because these are part of the questions CIT can ask you. Don't say that, oh, I didn't teach you, you came, you couldn't do it. I have told you. Into no part, your picture, or patro. Go and look for what they mean because the time is short. I am teaching you everything. That's why I'm disclosing it for you to know. And the funny thing is, when these things come, they are 10 marks. Can you imagine? So, question one, net out 10 marks. Explain the difference between compliance audit and performance audit. Explain how environmental audit feed into tax audit. Then you are there, 10 marks. Now, forward switchy. All because your lecturer didn't teach you. Please, this is a bad approach to learning. Your lecturer is just a reference material. You have to change your mindset. Your lecturer shouldn't be complete reliance. No. I am on standby. You learn when you have something you need help with, then you come. That's how it's supposed to be. So you need a guide how to learn, and where you have problems, you refer to the lecturer. But some people put all their hope in the lecturer. That's why they fail. You do 70, lecturer does 30. So if you don't learn and you fail, lecturer, no, always remember this. What trying to exam a real? We are in the business. Meboa, you are his business. So if you fail and you don't even come back, another person will come. But if you pass, it's a win-win for both of us. One, I get good reputation. Two, what pass? You come for other tax trainings, which is a win-win. So change the mindset. Do you get me? Do you get me?
yes,
Yes,
sir.
sir.
Yes, I tell people all the time, what if I'm misleading you? How would you know? Because Ghanaians don't like research. Whatever you are taught, you just accept it blindly, all
We will
because somebody
know.
is
Who told
confident.
you? When you are misleading, we will know.
So sometimes you won't know. A
Who
teacher is
told
one
you?
of the most riskiest people. A teacher can mess you up, eh? All the person needs is confidence to sit in front of a camera, and you will believe him. I'm telling you. You also need to do your homework. Meboa. Anyway, that's just by the way. Don't mind me. All right. So pre-audit research, the tax audit process, I told you can group it into how many stages? 4 stages. Meboa, you remember? So I told you we can have the pre-audit research or the audit planning stage. We have the field work and investigation stage. We have the working paper documentation and the review and reporting stage. Do you remember we mentioned this?
Yeah.
Good. Now let's go
Yes,
a
sir.
little deeper, just like I told you, right? So we said what? We are going to select the taxpayer for an audit. We know how to select the taxpayer for an audit. No be so. We are going to receive the case assignment from the head of audit. We are going to obtain or collect background materials about the taxpayer, which also involves the preliminary analytical review. We are going to do risk assessment and respond to the risks, or write how to respond to the risks. Then we determine the scope and depth of the audit. We document our conclusions, and then we discuss with the audit supervisor and the team. Now, once we are able to finish this, we are now going to what? Send a notification to the taxpayer. That's the introductory letter we saw a sample of. Because you see, I know we know about you. So we are now going to say that, okay, we have scheduled a date we want to come and audit you. Now, the date comes, we have to do an entry conference or an initial interview. And these interviews, audit interviews, are one of the most highly examined areas in your syllabus. I said what? They are one of the most highly examined areas in your syllabus. So when you go, audit interview can either come in the form of what? Entry conference or exit conference, or even normal reconciliation or normal audit interviews. across the entire audit, there should be communication at each level, and an interview can be conducted anytime, even as a review procedure. Do you understand? So, audit interviews, you must know them like the back of your hand. Okay. So, after we do the entry conference, if we are done with the conference, what we do is that we now do a tour of the taxpayer's premises and we have a tour of business checklist. I think one day they asked about the tour of business checklist, what goes into it. We'll look at that. Then we now review your internal control system, right? So we check your internal control system, whether it's strong or it is weak, and we document the control system. Okay, when I was in audit, we call this system confirmation. So we confirm your system and we see that you said that all goods that come must be approved. We are going to check whether they are actually approved. Check whether the signature of the person who approved it cannot easily be copied. And whether you have had instances where people have tried to overcome that thing, whether all your assets are actually locked. You said every cash that remains, you bank it. Nobody can enter your system. We enter into your system, right? So we can use test data. So that brings us to something we call computer assisted auditing techniques. Can it be auditing around the computer or can it be auditing in the computer? So we must understand the importance of CAT, what they are. They can either be audit software, which now GRA can see they have an audit software, right? Then we can also have test data. Test data is where you sort of put some sort of dummy data, sort of NADOS one, where you put that dummy data into the person's system to see how it works. You said that every customer order above 500,000 in your system, right? The system will reject it. So I will intentionally log on as a customer and key in 600,000 to see whether it is going to the system will accept it or not. It's like a sort of walkthrough, right? So you are confirming whether the system actually works. And that's where this sort of computer or assisted audit techniques work. I hope it's starting to make sense. So we do all these things. Then we now, once your systems are very strong, okay, we rely on the system and then we do little evidence. It's also getting evidence, but we do little or substantive test. So with substantive testing, we have what we call what? Test of detail. Okay, that's the verification, the vouching, and then we have what? Analytical procedures, which is where we establish trends. I get to use ratios just to see how data matches with management assumptions and things, just to agree with what they have said and generate evidence. Then that would involve more of what? Examining your books and records. I get it. If your systems are strong, we do less of that. If your systems are weak, it means we cannot trust your systems. There may be errors in your systems. So we now have to what? Examine your books and what? And records. Are we okay? So all these things that we are going to do, we are going to document them, and we document them in your working papers. So the working papers, they can ask you the nature of the working paper, what are the features of the working paper, the objectives of having audit documentation and working papers. I get it. So working papers is the documentation of all your audit work, and all audit work papers are stored in two files: the current year file, which we call the current file, information relating to the current year audit, and then we have what? A permanent file, which is what? Information relating to all audits. So this year's audit information, once we are done, that current file gets transferred into the permanent file, which when we go next year, we can still refer back to it. Do you understand? So that's working paper documentation. We are going to go deeper into it. Then we have the review and reporting stage, where after all this, the documentation, you have to review. So this is where your head of audit will review. Are you getting it? You yourself, you review, your manager will review. We call it auditor self-review. Head of audit will also review the work. And then finally to go through the GRA standard, which we call the technical review. If it's not GRA who did it, after the work is done, still GRA has to go through according to how they expect things to be done from the commissioner's level, and that's the strategic review. From there, they are going to send a draft report. Then they do what? An exit conference, and then a reconciliation meeting where they bring proposed adjustment. And when the taxpayer agrees with it, the final audit report will come, and then they will do bye-bye to the taxpayer. So that was the tax audit process in detail. If you have any question, you can ask. If you don't have, let's move to the ethical framework of a tax audit.
Question, please.
Yeah, John.
Please, I want to find out.
Please ask your question, Ade.
Okay. You mentioned John, that's why. I want to know, at the strategic review, is that where the office manager does his review?
No, the office manager. Yes, part of it. So the office manager has two roles. He can work at even the auditor self-review level, and he can also work at the strategic review level. It depends on what role he's playing at that particular time. But yes, your question is yes. Your answer is yes. Sorry.
Okay.
All right.
Yeah, Prof, please, can you throw more light on the test of details and the
I'll
substantive
come there.
testing?
I'll come there. So test of detail are where we actually do verification. So this is where we use recario. I say we use what? Recario. We use what? Recario. We use what? Recario. I don't want you to forget recario. So test of detail is where we use what? Recario. So R stands for recalculations. E stands for enquiries. C stands for confirmations. A stands for analytical procedures. R stands for review or reperformance. And O stands for observation. Do you get it? So test of detail is where we are mostly doing the actual auditing, like vouching, right? Where we trace a document to the source, like verification, confirming whether something existed, right? So these things are test of detail. We're actually taking some sort of invoice, working it through the accounts. Those are test of detail. But analytical procedures are where we just do what comparisons, establish ratios, just to confirm something we saw and to obtain evidence. Maybe if this year's receivable differs by 300% to last year, why did that occur? Can you give me the receivable schedule? We test cast the schedule, we pick a sample, we test the internal control, what is the agent analysis? When was the last receivable paid? What is your credit policy for giving people credit? Why is there a bad debt? Do you get the whole idea? John, is your question answered?
Prof, please, can you go over with the recario? Recario, the R is recalculation, the E is inquiry, the C is confirmation,
analytical
the
procedure.
okay, then
R is
review.
re-performance, or you can
Okay,
use review. Then we have O for observation. So these
okay.
are the techniques we are going to use to obtain evidence.
All right,
Question
thank you.
answer. Is your question answered?
Yes, Prof, thank you.
Good.
Sir, please, I didn't get the I. The recarry, the I.
It's the eye inspection.
Inspection.
Inspection, okay.
Yeah. So if you see somebody using Recario, I came up with Recario and ACCA people started using it. I have to sue them and I'm anyway. Let's continue. So now we are done with the introductory bit. I hope that was fine.